Good afternoon, my name is Jordan Lambert, market analyst at Gelatoma Management. It's Monday the 15th of July and I'm here with the weekly gold report. Gold had a superb rally last week, beginning the week opening at 1222.5 and closing over $61 high at 1283.91. There was a strong chance of the market clawing back some losses given its oversold, beaten down state, but the gains were also induced by Ben Bernanke, the Fed Reserve Chairman, somewhat changing his language to a more dovish tone in comments made in a press conference on Wednesday. Bernanke highlighted concerns with low inflation, possible delayed impacts of fiscal policy, and saying the unemployment rate understates the real job market conditions, and implying the timeline for stimulus tapering is still very much data dependent. This sent the dollar falling against major counterparts and sparked a gold rally to surpass the previous week's 1267 high to find resistance at 1300. The Bank of Japan decided it was unnecessary to increase the level of bond buying as the Japanese economy improves, which gave the dollar another thumping, with gold again becoming a beneficiary. Gold may be finding a floor, but this week's direction will be very much dependent on more economic data. This morning, we've had a host of Chinese data in the early hours of Monday, with the main headline being another drop in GDP, now standing at 7.5% for the second quarter compared to a first quarter's 7.7%. This indicates China's economy is dragging its heels more than expected, but this hasn't had any negative effects on gold as I speak, but it may have longer-term demand effects given that China are the second largest importer of the metal. At 1:30 GMT Monday, we have the US retail sales, which will be good evidence to assess the state of the US economy and will provide more clues in regards to the tapering timeline. The main events on Tuesday are the UK CPI, which could impact gold via pound dollar, and the German ZEW survey for forward insight into the Eurozone's leading economy. On Wednesday, the Bank of England released the outcome of their policy member votes on the asset purchase facility. This will be an interesting result following the new governor of the Bank of England, Mark Carney, saying that a stimulus slowdown is well away despite recent rises in inflation. Let's see if his fellow committee agrees with him. Any lack of congruence amongst the MPC members is likely to rattle the British pound and consequentially give the dollar a lift. Ben Bernanke is in the spotlight again later on Wednesday and Thursday, both at 3 p.m. GMT, presenting the semi-annual monetary policy report. This report is split into two parts. The first is a prepared statement, and the second part on Thursday is a question and answer session, which can lead to some unscripted comments and cause volatility. Other events to be mindful of on Thursday are the Spanish bond auction and the Philadelphia Manufacturing Index. Spain has been showing signs that its economy may be stemming the deterioration and ready to start a recovery, so it'll be interesting to see whether bond investors think the same or not. Friday is pretty light of data, but we have the G20. They are beginning the first day of meetings to discuss global affairs. Therefore, any news flow from there could move currency markets. Technical analysts will be studying the daily chart in particular at present, mainly because of the long-term bearish trend line that price is almost intersecting with, illustrated by the red diagonal line. The trend line is a nice clear line with three precise touches, which suggests it could be a reliable line. Therefore, consider a short bounce trade if the price makes contact. This will offer a low risk, potentially high reward trade, as the stop loss would be placed just on the other side of the trend line. If price finds itself intersecting with the 1300 resistance level at the same time as the bearish trend line, this will provide a really good chance for a short pivot trade. So keep an eye on any developments there. If price finds itself intersecting with the 1300 resistance level at the same time as the bearish trend line, this will provide a really good chance for a short pivot trade. So keep an eye on any developments there. Another bearish factor is the stochastics indicator, which is in overbought territory. It hasn't yet generated a sell signal, but it's good to be aware that the uptrend may be losing momentum. On the contrary, if there is a trendline break, look to go long, as this could trigger a nice spike in price. Thank you very much for listening to me, and I'll speak to you again next week.